The back end flagged crude down more than 8% in a single session. The Iran ceasefire just wiped the war premium off the chart. SPX held nearly flat, but the ripple through bonds, metals, and crypto tells a different story. The system's #1 ranked ETF and stock are still ahead, and one of them is in a sector that just got hammered today. SPX closed nearly flat, while QQQ and the Nasdaq confirmed a descending triangle breakdown. It's on pace for its worst July in 22 years. VIX is still 18.67, so the back end isn't clocking broad panic, just a structural grind lower in tech. Here's the thing. That Nasdaq structure, combined with the carry trade capital parked in QQQ, makes what's happening in bonds and currency markets the key driver right now. The 30-year Treasury touched 5.16%, the highest level since the run-up to the global financial crisis. And TLT is locked in a lower lows pattern near its annual floor. The dollar is holding firm, with Japan's carry trade dynamics adding structural weight. The yen is at its weakest against the dollar in 3 decades, and outstanding carry positions in U.S. equities run into the trillions. The same geopolitical easing that kept yields from breaking out today is the exact same force that just hit the energy tape. Energy got hit from both directions today. The Iran ceasefire removed the war premium from crude, and WTI shed 8.3% in a single session, testing its first meaningful demand zone. XLE and XOP are repricing the whole sector alongside USO, and the question the back end is tracking is whether that demand zone holds or gives way. That crude move didn't just hit energy, it changed the inflation math. And that's exactly what shifted how the metals complex read today. Gold picked up the safe haven flow as crude's collapse eased the inflation narrative, and the rest of the complex followed at a distance. Silver added about 0.2%, and the copper miners barely a quarter. Green across the board, but gold is doing the work. Whether the rest of the complex confirms that bid or just drifts along behind it is the back-end's read on whether this is a real risk-off rotation or a single session safety move. And the answer plays out in how international capital is moving. Developed internationals pushed higher, and emerging markets came along with them. EFA gained about 0.5%, and EEM essentially matched it. So the clean developed versus emerging split just isn't there today. Underneath that, Korea slipped about 1%, while Taiwan finished near unchanged. That softness in Korea and Taiwan is the same risk signal the speculative layer picked up on. ETH outpaced Bitcoin on the session. Spot ETF inflows eased some of the pressure there. But Bitcoin's chart is split from the narrative. It's testing its 50-day moving average, while the 200-day sits well above as a ceiling. In the 4-year cycle pattern the chart has been respecting hasn't reset. ETH gets the inflow story, Bitcoin gets the technical ceiling. That's the divergence the scan is holding right now, and the best of best filtering is what puts it in context. After a session where crude shed 9% and the war premium evaporated, that energy collapse is exactly what makes the ranking results here so interesting. And the #1 ETF is still ahead. SignalFinder Pro's scan shortlisted 129 symbols today. And what the system surfaced isn't writing from the headline tape. Financials are leading, cybersecurity is holding its ground, and the risk-off pressure is doing the filtering work across sectors. XLF, financials, is sitting at the #1 sector slot on the scan. Healthcare lands at 2 with XLV, and real estate rounds out the top 3 with XLRE. XLRE is the laggard in that group, and in a session where bond yields are elevated, that makes sense. The ranking is telling you rotation into what can handle yield pressure, not what needs rates to fall to function. The top ETF slot on today's scan goes to UGA, the United States Gasoline Fund, which tracks front-month gasoline futures. It pulled back with the energy tape today, but the ranking engine is scoring longer-run structural positioning, not a single session's direction. UGA holding the #1 ETF slot on a day crude crashed 9%. That's the cold open loop paying off. The system surfaced an energy name at the top through all of that selling. Palo Alto Networks, PANW, is the #1 ranked stock on today's scan, the large-cap cybersecurity bellwether. It pulled back with the broader tech tape today, and that's exactly what the ranking engine is reading. Durable positioning through volatility, not a green session. PANW, sitting at rank 1 on a down day for tech, is the system signal on where institutional anchoring actually is right now. The crude collapse that opened today's session reset the inflation math, shifted safe haven flows in metals, and exposed the carry trade pressure sitting under the Nasdaq. That's what the anomaly was really about. The thing to watch tomorrow. Does the 30-year Treasury confirm that resistance rejection? Or Does it push through and flip the whole macro read? Verify U, GA, and PANW live in SignalFinder Pro before drawing any conclusions. And remember, this is educational, not financial advice. Do your own homework.